as we're looking at acquiring a potential business, we are considering getting an SBA loan. And so the question comes up, what do you actually have to do? How do you have to look? What has to be true for you to actually get an SBA loan? And we've been getting a little bit of a masterclass in this. We're by no means professionals when it comes to this, but we've been getting a masterclass kind of going through the process ourselves and kind of getting that firsthand knowledge of what's it going to take and what do you have to do. And we're getting this master class right now from a lender, a banker who's been in the industry for 15 years and is walking us through exactly what things need to look like. He's a straight shooter and he's just giving it to us straight, just telling us, hey, here's what you actually need to look like. Here's what you need to present. Here's what you're going to need to cover, or the underwriters are going to tell you no deal. And
now, one thing that I did want to mention about this business, though, is it already got its SBA pre-approval. So the business itself is pre-approved. Oh, wait. Oh, mic switch. Mike's check the audio on for us. I think we're going through computer audio right now.
Sorry for the technical difficulties, ladies and
there
gentlemen.
we go.
We're back.
But yeah, the SBA pre-approval on the business actually is a huge shortcut for the process because that cuts out a whole chunk of underwriting. So really, we're kind of fast-tracked to the second layer of the process, which is the individual review. And that is, this is the part that nobody wants to talk about, quite frankly, because it's the most boring, but it is the most critical, especially if you don't just have a wad of cash sitting around.
So when you're looking at a business, this is for business acquisitions is what we're talking about here. The one that we're looking at, like Ryan said, it's pre-approved. So what that means is an SBA lender already looked at the business and they looked at the financials of it and they figured out that, okay, based on their rules, this passes the smell check. It covers the debt service coverage ratio, meaning it makes enough money and profit every year to cover the SBA loan debt and still leave enough left over to make it not feel risky to them. So these are the kinds of questions that you've got to kind of poke for and ask for when you're looking at this is what are your rules? What do you actually underwrite based off of? And what I've noticed, because I've kind of gone about this a couple times now, is some of them will be forthcoming with this kind of information and some of them will not. And if they're not forthcoming, it's a giant waste of your time, because if the banker is not giving you what you need and how it needs to look, you might spend all this time trying to approach it, trying to draw the documents up and everything and put everything together. And you might just not get approved because you just didn't know what it needed to look like. So you want to look for someone who will actually take you through that and explain it and tell you exactly what it needs to look like. And in the case of the gentleman that we're working with and talking through it with, he's been in the industry for 15 years at the same bank the entire 15 years. So as he walks us through it, he's like, I don't want to waste time. I am going to just shoot you guys straight. I know the underwriters. I know what they'll say yes to, what they'll say no to, and I'll just tell you how it is.
And the one thing that I think is important to note is that the broker and the banker have worked for many years together. They have done multiple deals together. They have a relationship. So the communication has been absolutely excellent. Every question we've had, if the banker needed clarity, he would go back to the broker, come to the banker, and we would have an answer within maybe an hour or two from them. So that sort of communication and history with working together is also a huge plus to have, because there's no surprises. They know how each other works. They know how each other operates. So you're getting a very clean view of the whole picture, because you can't really keep secrets when you're dealing with the SBA specifically. So it's made the process very streamlined, essentially. And now, one thing we always talk about in here is having your 10% down payment. And that is important. You have to have that, obviously, to show. However, in many cases, if the business if it's not asset heavy enough where the full amount of the business can be, used as collateral for the loan, they're going to ask you for a little bit more. And in some cases, they're going to ask for another 10%, meaning you're going to have 20% to show for the business, that 10% down and a 10% extra as like a cushion. So one of the things that we did learn was anything that's a retirement saving plan or alternative asset, in the sense of crypto space and other alt investments, they don't count. So if you got a very nice 401k, they won't underwrite against it because they won't do that. So it has to be investment accounts, brokerage accounts.
Things
It
that
can
are
be a
immediately
house.
liquid.
Yes, something that you could go liquid on without much penalty, if any at all. So something to keep in mind.
And you have to be able to show that, let's say you have $100,000 down payment, you have to be able to show that you have enough in those qualified accounts, meaning accounts that are not alternative assets, retirement accounts, etc. You have to be able to have enough in those plus another basically twice that amount in wiggle room is what they told us, which is, it's kind of crazy. Like it's ultra conservative. But I mean, we're not here to talk about whether the game is skewed or out of our favor or what. We're just here to talk about what is actually there and what's applicable and how you can actually navigate it. And so what they're looking for is you have to basically be able to show in cash or cash equivalents or in liquid funds that you've got 20% of the purchase price. So if you need to buy a business for $2 million, you better have 400 grand sitting around that you can show.
And it's just one of those things that I think we say it lightly, but it really is something that I think needs to be, repeated. You got to have, you need 10, bring 20 because that's what they're going to want. And we're also bringing a good W-2 alongside it. So SBA loves to see a W-2 connected to a business outside of it because that helps them with the cash flow projections. So with all of that being in the same vein of what the SBA is looking for, you really have to make sure that you're really cashed up so that you have what you need. I don't want to say it's an overly complex process, but like you said, it's a conservative one. And when you're dealing with, especially the SBA and especially, in this situation, a possible franchise establishment, they're going to have rules on top of the SBA of what they want to see. So the banker also has to work within the franchise's rules. So this could be very different if you're going through directly to a small business owner. It's a one-to-one. The terms are very flexible. They can be very fluid. You can change terms and conditions and all that. But in this situation, we're kind of locked into what they say is what goes. So you really have to kind of consider all the aspects of whether you're going with a more rigid firm type of situation, or if you have that bit of fluidity with like a local mom and pop shop that's on Main Street.
That's right. And, I think that when it comes to fluidity and flexibility, that's something to look for here in the process because it's a rigid process. Like it's something that's going to be a little bit exhausting and something that's going to really require a lot of effort on your part to get across the finish line. So you want someone that can be flexible and fluid and just help you through the process. But to tell you what it's actually like getting one, they're going to lift up the skirt and they want to see everything. They want to see exactly what your financial picture is. So you better be approaching it with a clean face and someone who looks good on paper, right? If you traditionally are used to operating in business with high leverage and you just carry high leverage as a person, even if you're paying it all back on time, but you carry a lot of leverage with you as a person, you're not going to look good on paper to the SBA and you could have some trouble. So it's just something to be wary of and to understand because you don't want to waste your time in this process. It's very easy to waste your time.
I guess to put it lightly, it's like a mortgage review on steroids. And I've talked to people who have worked in mortgage banking and refi is also, going under the magnifying glass all over again. But explaining this process to even them, they were like, that's crazy. They're going to be doing a lot. So every credit card charge that you've had, they're going to look at, they're going to review everything. So if you got anything that they would flag, it's going to come up. So the only thing I can say is try to get as much liquid as you can, pay down what you can to get your DTI to 50% or less, and just really think about it from the thing of, am I the ideal candidate for this amount of money given the experience and stuff? And we've already cleared the experience hurdle. We've cleared all the other ones. It's literally going to come down to, is the money there or not? And that's going to be up to their underwriting because it could be there, but underwriting might say, yeah, maybe it's not all there.
Yeah. So to kind of sum up what we talked about, you've got two sides of this, right? You've got, does the business qualify? And then you've got, do you qualify as a person? The first one that I would try to attack is, does the business qualify? Because this is going to help you determine whether you should even do the deal or not. If the business doesn't qualify for SBA lending based on the asking price that they're asking, then I would start asking some questions about whether it's a good deal for you in the first place. Because if they're asking way more than it qualifies for, well, there's probably something wrong. There's probably something that the SBA saw that maybe you're not seeing, or maybe there's some risk that they're associating that you're not associating. So just go off of what they say. It's probably a better bet than you trying to figure it out on your own, unless you're really experienced and have done this many times before. Then once the business itself qualifies on its own merits, then and only then should you take a look at, okay, can I qualify as a person? So you need to have liquidity to the tune of basically 20% of the asking price that you can show, whether that's you showing it or you need to get a gift from somewhere or something like that. You've got to be able to show that 20%, at least from what we've been told. You need to be able to show, if it's $1 million, you got to be able to show $200,000 that you have available. 10% of it is going to go to, like, 100,000 of it is going to go to the actual down payment or so. And the other 100,000 just has to be there to make them sleep better at night as bankers. And then depending on the deal, they might require that the seller put 10%, 5 to 10% in seller finance, just to de-risk the deal a little bit for them. They might require that just, to feel a little bit better about it. And in the case of the one that we're looking for, or the one that we're looking at, they're going to require that. And that has to go on full 10-year standby until the end of the loan. But sometimes the banks they'll help you refinance that a couple of years in, just so you can help the seller clear their position out. So these are all just the things to think about. And this can help you hopefully determine, is this a business I should acquire? And do I qualify as a person, or do I need to go back to the drawing board?
Yeah, I think that about wraps it up. I mean, as we go through this process, we're definitely going to keep doing some lives on these and kind of coming through with it, and really kind of explain just what the hell's going on with this stuff. Because let me tell you, getting pre-approved was the easy part, and this is quite a bit more than even I anticipated. So that'll certainly be what we next couple lives, we might be doing some more of that and telling them where we're at.
That's right. And until the next time, tune in every Tuesday night right around 6 p.m. Eastern Standard Time for these breakdowns of deals, business acquisitions, and things that we're working on. We look forward to seeing you on the next one.